Tesla stock is trading down almost 0.5% here in after hours, and this is why. It actually has nothing to do with Tesla at all. Tesla actually did very well today, regardless of the 0.3% fall. Many other stocks were down a lot more than that. Salesforce plunges about 15% after first quarter revenue of $9.13 billion missed consensus estimates of $9.17 billion, according to LSEG. Adjusted earnings of $2.44 per share beat a consensus estimate of $2.38, but current quarter guidance fell below estimates on both the top and the bottom lines. This is the first revenue miss by Salesforce since February 2006. So needless to say, that does not happen all the time, and it is sending down the S&P 500 here in after hours trading. S&P in after hours is down 0.37%. The Dow is going to be down even more than that. Dow futures are currently down 0.68%. S&P is down 0.33%. The NASDAQ is down 0.4% for pre-market heading into tomorrow. The Dow is down more because Salesforce is a component of the Dow, and unlike the S&P and the NASDAQ, which are market cap weighted, the Dow is price weighted. So when you get a Dow stock that falls 15%, and it's a high price stock, that has a huge effect on the Dow. We do have some big events coming tomorrow morning that will really shape how the broader markets trade. I don't think Salesforce's disappointment is going to necessarily mean tomorrow is just screwed and it's going to be a bad day. I don't necessarily think that's the conclusion that should be drawn. Tomorrow at 8:30 in the morning, we will have GDP growth rate quarter over quarter second estimate for Q1. We're expecting a GDP number of about 1.3%. If that number comes in lower than that, markets are probably going to like that. I won't like that, if I'm just being honest with you. I want to see the economy doing as strong as possible. And this is a big drop we're expecting. The last number we had was 3.4%. So you're already expecting 1.3%. I think the markets would like it if it came in lower than that. But again, if it comes in higher, I think that's actually good news for markets. Corporate profits quarter over quarter are expected to come in around 3.9%, the same as last month's estimate. GDP price index quarter over quarter is expected to rise to 3.1% from previously being 1.7%. So this is going to be your big data coming out tomorrow, and I will tell you right now, Wall Street is going to pick apart the GDP report. They're going to try to, basically justify why it's low. They're going to look at inventories, they're going to look at exports, they're going to look at all of these different things. But the point is, if it's low, it's low. Or if it's high, it's high. And that's really what you want to pay attention to. You will also get initial jobless claims coming out tomorrow morning, 8:30 in the morning as well, for the week of May 25th. Estimates are around 218,000 initial jobless claims. Last week was 215,000. We did have that one-off week that was like 240,000 or so, 232,000 or so. That was a lot higher than what we were expecting. And sometimes you can spike for a period of time, like we seen back in June of 2023, and maybe it doesn't lead to more unemployment or a weaker labor market, but it can be one of those leading indicators to say things might be getting worse from here. And they've went back to being super low. So just be on the lookout for that. A higher initial jobless claims number. Markets are probably going to like that. Tomorrow, you will also get wholesale inventories month over month. Like I said, that does, heavily impact the GDP report, and markets will try to use inventories potentially as a reason why the number is low, like they did with the first number that came out. Now, you will get pending home sales month over month and year over year that come out at 10 o'clock in the morning tomorrow. Month over month is expected at -1%. Year over year is expected at 0.5%. And then tomorrow as well, you will be getting Fed speakers like Fed Williams that speaks around noon and Fed Logan that speaks at about 5 p.m. What's actually interesting about this drop that we're seeing in after hours today is it's really not happening in the Russell. Yes, the Russell's down 0.1%, but that's nothing compared to the Dow or the NASDAQ. Maybe the small caps can start to perform a little bit better, especially if GDP numbers come in a little bit worse than expected tomorrow morning. Our big catalyst for this week that really could make or break our markets is core PCE month over month. That's going to be a very important number. Wall Street is expecting the lowest month over month number for all of 2024 so far. So if you come in at 0.2% as we're expecting, that will be great. If you come in at 0.3%, not as great. If you come in at 0.1%, that's like the best case scenario, and I would expect Tesla could have a 7% positive day. The Russell could have a 5% positive day, just based on that alone. It would get a lot more money off the sidelines into areas of the markets that have been really just depressed over the last couple of months. Now, you will also get personal income month over month, personal spending month over month, and your PCE price index month over month and year over year, as well as Chicago PMIs that come out all before market opens on Friday. So that's really your big catalyst to, look ahead to this Friday. But tomorrow, I am also expecting a significant fluctuation in stocks coming tomorrow. But let's get into a little bit of your Tesla stock news today. First and foremost, you did have some pretty bullish option activity today. You had some neutral option activity today in Tesla stock. What I'm paying a lot of attention to are some of these deep in the money puts. Take a look at these expiring on June 21st. Obviously, hedge funds and institutions right now, they're seeing a lot of potential risk around this vote for Elon's comp package. You can see a June 21st 240 put. Again, these break evens are going to be roughly where the stock is trading at right now. So for these hedge funds buying these puts, it's essentially insurance on their position. They're going to make a one-to-one amount as large as their position is, right? So if Tesla drops 50%, they're going to make 50% on their hedges, be net neutral on their Tesla long position. That's what insurance is for. That's what puts are, is insurance. That trade was worth $3.11 million. And it's generally like a neutral trade, right? You're not going and buying 150 puts, 120 puts. You're not expecting the stock's going to fall necessarily. You're just saying, hey, if the stock does fall, I want to be protected in my long position right now. So it's not necessarily a super bearish trade. It's just a more neutral trade. You do have a June 21st 250 put. The premium paid there was $3.62 million. You do have a another trade here, a 250 put for June 21st worth about $6 million. A June 21st 255 put worth $1.2 million. A June 21st 266 put worth $4 million, and all of these trades are June 21st. All right, so out about 2 weeks after the March 13th vote is done. And then you have another one here, a June 21st 276 put worth $12.31 million, a June 21st 300 put for $2.14 million, a June 21st 320 put worth another $2.14 million, a 166 put worth about $9 million, and another large one here, or two large ones here. This is a 240 put worth about $6 million, and this one is a 250 put worth $15 million. So there is a lot of funds right now going out and buying protection on their positions. If you need your money potentially in the near term, maybe buying some protection on your position isn't a bad idea, because that's what hedge funds and institutions are doing. I think they're looking at this kind of the same way that Gary Black is looking at this, and really the same way I'm looking at this as well. As I previously mentioned, Tesla stock could fall big time if Elon's comp package is not reinstated. Now, Gary Black today, and I said that yesterday, Gary Black today came out and wrote this post at 9:17 a.m. this morning. Investors who vote against Elon's 2018 comp package in the 2024 proxy vote are not acting in the best interest of Tesla shareholders. If investors vote no on Elon Musk's 2018 comp package, there is a fair chance Elon leaves Tesla or redirects his enormous talent and energy to one of his other companies, such as XAI. Without Elon's leadership, many of Tesla's most talented engineers will leave, and efforts to get to unsupervised autonomy before competitors will stall or worse, may fail. Every Tesla institutional shareholder who wants Tesla stock to go higher should vote for Elon's 2018 pay package, proposal number 4 in this year's proxy. Anyone that is telling you to vote no, anyone that says they're voting no, they want Tesla stock to fall. Okay? There is no other way to put it. They're not trying to protect your value. They're not trying to protect the stock. They're trying to cause the stock to fall. And that at this point is a fact, whether they know it or not. That's what they're doing. And that's what they want. On that note, the news that I shared today, according to the Wall Street Journal, Donald Trump and Elon Musk have reportedly discussed a possible advisory role for Elon should Trump reclaim the White House. Elon has signaled he isn't interested in writing a check to a super PAC. GM has fully unveiled a 2025 Cadillac Optiq EV with a starting price of $54,000, $46,500 after the federal EV tax credit. You do have 300 miles of range that is estimated, and many other perks here. And I actually think it's a pretty good value for what you're getting and the price you're paying. If we just want to be honest. Now, is this going to be a mass market vehicle? Obviously not, but I do think at $46,500, it is an attractive option for, a electric vehicle. Let's be honest. It's way better pound for pound than the Chevy Bolt. Now, the next gen 2026 Chevy Bolt will be, quote, the most affordable EV on the market, GM says. It will have great styling. It will have great range. Really good charging time. It will use an LFP battery and Tesla's North American charging standard. But personally, I've never been a fan of the Chevy Bolt to begin with. Holmar's catalog writes on X, all the 2018 package does is allow Elon Musk to purchase 303,960,630 shares of Tesla stock at an exercise price of $23.34 per share from the company. On a cash basis, it doesn't cost the company anything to pay him. Counterintuitively, the company's cash balance would increase by $7.1 billion if he exercised the shares, allowing the company to invest more and fortify its balance sheet. I believe it is in the best interest of Tesla shareholders to have Musk incentivized to focus on Tesla as many ventures compete for his scarce, valuable attention. That is to say, if Musk has 25%, that other 75% is worth more than the 100% of the company would be worth if Musk wasn't a shareholder. Giving him equity and having him involved will make shareholders richer. And that's basically Holmar's catalog saying in a little more complicated way than most will understand is just give Elon his 25%. Or we're going to lose a lot more money if he's not there. Now, Tesla's stock today tried to get above that 20-day moving average. It did not happen. Well, it did happen, but you got rejected there. You did not close above there. And you did get that end of the day sell-off like we have seen over the past, couple of weeks. You just get that sharp end of the day drop. And that did push Tesla under that 20-day moving average. You really want to see if we can hold support above that 50-day moving average. That's really the level we want to hold support at. But right now, you're probably just going to be in between the 20-day and the 50-day. 50-day is at $171.76. 20-day moving average is currently at $177 per share, at least until we get to Friday. It wouldn't surprise me if we just stay in this kind of tight range and then break to the upside or break to the downside depending on how PCE is. Now, the RSI for Tesla is almost exactly neutral at 50.81, and the MACD lines are still positive, but the MACD line, this yellow line, did go under the blue line, which is a short-term negative signal. And well, the stock's been falling for 1, 2, 3, 4, 5, 6 days now pretty consistently, and I mean, really for longer than that, ever since April 29th, when you temporarily hit about $200 per share. You've been falling ever since, so I expected this to happen. And not great, not bad. I don't think it really matters too much at this point. Another important thing to be watching heading into tomorrow is what 10-year treasury yields do, because they were up over 7 basis points today in regular trading. They're down about 1 basis point here in the futures market in after hours, technically I guess pre-market. So that could be better than not for stocks. I mean, today's 7 basis point rally in 10-year treasury yields was definitely not good. So any kind of flat day for 10-year treasury yields, or maybe they fall a little bit with the data that comes out tomorrow with the GDP report, well, that will be good for Tesla. So let me know what you think about all of this information down below in the comments section. Hit the like button as well as subscribe to the channel. Also, specifically, let me know down below in the comment section if you are hedging out your position in Tesla heading into the June 13th vote, like a lot of these other hedge funds and institutions seem to be doing. Thank you for watching. Enjoy your day and night. I will see you in the next one.